It is an enormous pleasure to me to welcome you all here for tonight's discussion and debate. I have a very simple task, which is to introduce Magnus Linklater, who is going to moderate tonight's event. But can I just say to you, and this sounds rather bleating and pathetic, that there are a few benefits come from the role I have as convener of the meetings committee of the RSE, except occasionally when you can have, as of tonight, an occasion when those contributing are, in some cases, old colleagues and friends, but in each case, individuals for whom I have the highest respect and regard. And therefore, I hope in the course of the evening, you'll see why that statement is justified. Magnus Linklater has very kindly agreed that he will both introduce the speakers and then moderate the evening. Magnus is, I think, a towering leviathan of a man in Scotland who has written prodigiously, continues to write about such a range of events and has been recognised rightly for that. I was realising, Magnus, that I think one of your forays into radio was to chair an event Eye to Eye on Radio Scotland. The challenge this evening is whether our two speakers, by the end of this evening, will be seeing eye to eye with each other, let alone with some of you. So, Magnus.
Thank you, Andrew. I think Leviathan is going slightly over the top. The sea monster, I think, isn't it? Welcome everybody to this discussion, which could not be more important, topical, and interesting. Ethics and professions, banking as a case study. Incredibly timely in the week that Barclays and RBS have pled guilty to rigging the foreign exchange market and have been fined or about to be fined nearly £3 billion. They've pled guilty to that. Also running through the election was the issue of bankers' bonuses, which I am sure will crop up this evening. It was an interesting bone of contention between Mark Carney, the Governor of the Bank of England, who was objecting to the EU proposals for a cap on bankers' bonuses, and Ed Miliband, who is proposing just such a cap. So in a way that sort of encapsulates the issue of bankers' bonuses, and we'll probably hear about how that argument runs. But the discussion this evening will broaden in beyond just banking into the professions, and I suppose specifically accounting, which has not been entirely free of its own scandals. In fact, just this week, Tesco has appointed a new set of accountants, having got rid of its old ones, which presumably presided over the exaggeration of £250 million on its balance sheet. And of course, going a wee bit farther back, who could forget things like the Enron scandal and other huge financial scandals in which accountants were directly involved. I was just doing a little bit of journalistic research on this and came across one mega scandal which sort of brings the two issues together. It was the Aig scandal in America in 2008, when the American insurance group, after posting the largest corporate loss in history and getting bailed out by the US government, went on to award its executives over $165 million in bonuses. They know no shame. So that is the kind of spectrum of our discussion this evening. Issues of regulation, morality, ethics and accountability will, I'm sure, come up together with this conflict between how do you run an internationally competitive organization with the need to rebuild public trust. Now, our two speakers this evening are well qualified to address these and other issues. Dr. Susan Rice is a chartered banker, Managing Director of Lloyds Banking Group Scotland, previously Chairman and Chief Executive of Lloyds TSB, and the first woman to head a UK clearing bank. She is also Non-Executive Director on the Court of the Bank of England, where she chairs the Audit and Risk Committee. She also chairs a new UK-wide initiative to create professional standards for bankers for the first time, the Chartered Banker Professional Standards Board. Anton, Colella, Chief Executive of the Institute of Chartered Accountants of Scotland, a position that he has held since October 2006. Previously, he does not come from anything like a banking background. On the contrary, he was Chief Executive of the Scottish Qualifications Authority, following a period as Director of Qualifications, and he was elected Chair of the Global Accounting Alliance in November 2011. So he comes from an interesting background, but he will represent tonight the Institute of Chartered Accountants, but also his own challenging and interesting perspective on this. So I'm going to call on Susan Rice to talk first, then Anton, and then we'll have a discussion and you will have the opportunity for questions. So, Susan.
Thank you very much, Magnus. Good afternoon to everybody, and I'm glad you didn't go through the whole CV because you would have strayed from banking, but there's one part you wouldn't have perhaps known about, which is that I started my professional life as a medical researcher at Yale University in the States, a lot of time looking through a microscope. So when I first moved into banking, I didn't think it so strange when the CEO asked me to observe with my outsider's eye, to look at the bank through a different lens than the others there would use, and tell him my first impressions. That was a good way to get me going in the role, especially since scientist and banker might not have been seen as the likeliest of combinations. Some might say the same thing about ethics and banking, unlikely soulmates perhaps. Some might say that, maybe a number of you would, and I understand exactly why, but I don't say it because I put a different lens on banking, and that's a little bit of what I'd like to talk about. Banking, of course, is delivered through products and services, advice, financial instruments, but it's about something else. It serves a purpose. Its purpose is to enable economic activity across markets and help create wealth across society, and I mean the whole of society and pretty much all markets. I've led work in the US and here to widen access to finance, and this has been both most creative and most gratifying when the focus has been on the edges of what I would call mainstream banking. So I'm going to tell you two stories in my comments today. The first just now to describe what I mean by that. And this goes back to when I was working as a banker in America, and at one point, what I would call a rogue developer. This is a developer of large buildings who wound up in jail, but he'd been funded by a team in my bank to build a shopping mall on wasteland in the South Bronx. The South Bronx was the poorest congressional district in the U.S. He was corrupt. He, as I say, wound up in jail. He bankrupted a couple of trades whom he brought in, which is very sad. And almost even worse than that, he left that community with another visual manifestation of abandonment, a half-built shopping center, the only one they would have ever had. Regulation required us as a bank to take the loss. This was a loan as far as we were concerned, to just book the loss and walk away. However, we did something that had never been done before. The bank became developer. We set up a subsidiary, so we financed ourselves basically and completed the project and expanded it. To do that, we had to work outside regulation. We had to work outside the rules on credit and so forth. And we did it. We did it transparently and openly. And by doing that, we turned a bad debt into a good one. More importantly, we created jobs and services in that community where there was a huge pent-up demand for such. We expanded the project, added office space, added a market, and even added a cinema to the development, the first one there ever. and more people saw The Lion King at that cinema when it first came out in America than anywhere else in the country. Now, I've just described some social benefits from this project, but there were financial benefits as well. The business case for the project was actually created based on the new jobs that would come into the project and into the shops and buildings, and it was created on turning an urban desert into an area that people themselves would come to. Office workers willing to work there because there would be shops and eateries right on their doorstep. That meant that these small shops and restaurants could survive because there'd be custom. And that meant that the shop owners could pay their rent, and all of this together would help to make a commercial success of the project. Highly unusual thing to have done, the first time, maybe the only time, that a bank ever became a developer in America. But it really focused the mind on determining value based on activity beyond the identifiable numbers, beyond the spreadsheet. We made a virtue of operating outside of conventional regulation because we had a greater good in sight. We made it commercial by factoring in future social benefits into the economics of the transaction itself, drawing on our purpose as well as on the numbers. It's through that kind of lens that we see clearly the best that banking can be. However, a few years back, things looked very different indeed, and I found myself, like so many others, hesitant to say that I was a banker. There's no doubt about the turmoil in banking which has come out of the financial crisis, but sometimes it's only from crisis that we see transformational change. My proposition is that we need such change. We need banking to demonstrate once again that it enables the economy and therefore society to function and flourish by creating wealth and protecting assets. We might call this a test of the ethic of banking because banking isn't a mathematical game. It's not an end in itself. It serves a purpose. So, are we actually seeing such change in banking today? I'll share my perspective by looking through three lenses: regulation, professionalism, and culture, each of which can be considered independently, but I believe they need to be effectively woven together to create the change that's required. Currently, banking is undergoing a significant shift in the way it's regulated. I've spoken in the past about what I call the 4 C's, lots of changes around controls or rules, capital requirements, competition, compensation, which Magnus mentioned, but a key area of regulatory focus right now is on accountability. It's not just what bankers do, it's how they do it. So I'll ask the first of 3 questions. Will we ever really see individual bankers held directly responsible for their actions? You'll be happy to know that I don't propose to go into detail about the new senior managers regime or conduct rules, but I do want to share my thinking about the role of regulation and the impact of regulation on the actions of bankers, not on the institutions, but on the individuals. The nature of regulation matters greatly. We know that tick box compliance isn't sufficient, nor is regulation that prescribes too much. In the story I told about the South Bronx, we broke the rules, but we did that for good and just reason. We can never anticipate every possible situation, which means there'll always be a need for judgment, and we mustn't stifle that with too many rules. Complexity in regulation can also be pernicious because it so easily attracts around it a growth industry. As banks work out what the regulations actually mean, the risk division grows ever larger. Advisors hire new experts so they can tell the banks how to meet the regulations, and the regulators expand their number to make sure they can be effective enforcers. And everybody's focused on what's in the box and whether they can tick it. Yet that kind of focus can inhibit what really matters, which is what's good for the customer, what's right and fair. We saw during the crisis how overly complex decision models and algorithms made it nigh on impossible for many bankers to exercise judgment, independent judgment, whether about a transaction or a client. Complexity feeds on itself, takes on a life of its own, makes it hard for people to make their own judgments. But that's one thing we mustn't take away from bankers. Indeed, we have to restore it. When you don't exercise judgment, you don't take responsibility, and surely that's what we need more of, not less. Time will tell whether the new regulatory regimes will deliver accountability, but their focus on accountability now has to be a good thing. Now, if regulation is, as it should be, a constraint, then professionalism sits alongside it as an enabler. So let me shift the lens to professionalism and start with the question, is banking a profession? Some would say, absolutely not. It's not self-regulated. There's no license to practice, no universal code of conduct for bankers. But banking does require specialized and broad knowledge and skills. There exists an asymmetry of knowledge between practitioner and client. There's a need for accountability and confidentiality, and banking provides a service for the public good. These are all hallmarks associated with the profession. But we, both within the industry and outside it, don't talk about banking as a profession, we talk about a banking industry. And language, of course, makes a big difference. It underpins what people think. Even if the links are strained at times, professions are nevertheless more trusted than companies in general. Clients typically have more confidence in professionals whom they consider highly trained, competent, ethical. Professionals typically take great pride in their own work. Trust, pride, competence, the very language banking is trying to reclaim. Not surprising, perhaps, that there's a groundswell right now to recast banking as a profession. And professions require standards, not just qualifications, but standards. So a new body has been formed, the Banking Standards Board. I find myself as one of its first non-executives. We're just about to get going, and will shortly begin to explore what standards, above and beyond regulation, might be established for banks. But let me focus on another initiative that has been leading the drive towards professionalism, the Chartered Banker Professional Standards Board, which I'll refer to as the PSB, which was launched in 2011. I have the privilege of chairing the PSB, which aims to help rebuild trust, confidence, and pride in banking by developing a suite of professional standards for bankers themselves. It's important to note that while banking has been served by professional bodies for the better part of its 300-year history, and there are many banking qualifications, there's never been a requirement for bankers to join a professional body and be qualified. And until the PSB was created by the Chartered Banker Institute and the industry itself, there have never been agreed professional standards for bankers, not just in this country, but just about anywhere else. This is a voluntary, industry-led initiative with the individual banker, not the institution, at its heart. Our standards set out what bankers should know and how they should act. The standards are about broad knowledge and behavior. So far, we've developed standards at foundation, more recently leadership levels. We're seeing what we consider to be significant success. Well over 100,000 bankers in the UK have achieved the foundation standard, close to 200,000 globally. Over the course of this year and next, we're implementing the leadership standard, and we're working with the regulators to demonstrate the strong alignment between professional standards and the new regulatory regimes. Professional standards, as they should, go well beyond the scope of regulation, but there's a symbiotic relationship in that bankers should be able to use their achievement of these standards to demonstrate that they're indeed meeting the regulatory requirements. I noted at the outset that for banking to exhibit transformational change, a number of threads need to operate in tandem, and I think we're making that in part a reality with the PSB. But despite the strength of the PSB's achievements, however, success can't just be set out in numbers. The success of the PSB can only be properly measured by how banking is conducted, how seriously individual bankers take their role as stewards of their customers' finances, and perhaps more importantly, most importantly maybe, the extent to which bankers collectively see themselves as part of a profession. This means cultural change for many bankers, which, if it's not too much of a stretch, perhaps can be said to act as a filter over the lenses of regulation and professionalism. So a third question, is there a prevailing culture across all of banking? Having worked in the US, first for one bank that then became another, and then here for Bank of Scotland in the old days, when it was only just that, then Lloyds, TSB Scotland, latterly Lloyds Banking Group, and having been a central banker, it's absolutely clear to me that every institution has a unique culture, a culture informed by the roots of the organization, by the people working there, and undoubtedly influenced to the greatest extent by those at the top. But during the boom years, a degree of homogeneity spread across banking. Many institutions came to look and in particular act like most other banking institutions. Few would probably argue if I say that concepts such as stewardship, integrity, accountability became far less prevalent. What took their place could be debated, but I think there'd be likely a consensus that in most gatherings that profit took the place of stewardship, and overly complex products and processes took the place of bankers exercising judgment. When we talk about culture, it's too easy to refer to corporate values, to what the institution says about itself and how it operates. It's much harder for any institution to turn a lens on itself and really examine what's going on. Pretty much every chief executive I've come across says the right things about the institution and its operating principles, and likely believes those statements when they're being made. But do the colleagues below that level exemplify those principles, those values? How do they actually behave? How's performance judged? By what was achieved or how well it was done? Is it the what or is it the what and the how? Above all, how are decisions made? Through a process of evidence which is tested and challenged or through blind assumptions in agreement with others? Is value placed on getting it done or getting it right, or on getting it done right? Banks spend a lot of time on culture. Each has its own way of going about it, but in recent years, pretty nearly all have been focused on the elements of trust, integrity, and professionalism. So if they stick with it, where will that lead? I've thought a lot about the future of banking, and that takes me to my second story as I draw my comments together. This goes back to 2009. It was in February, and that's when the economy basically hit rock bottom. And if you remember, the headlines in the newspapers with very tall letters were all about vile bankers, and an awful lot of bankers were going around, if you will, with dark glasses on. It was a very difficult time, and in a way, some of those times are still with us. I was in London. I got into a taxi to go out to the airport, and the taxi driver was quite chatty, and he said to me, I think somewhat cheekily, "So what do you do?" And I must say, I paused for a minute before I said I was a banker. I paused because I had a long day, and I thought, if I tell him I'm a banker, he'll give me a lot of abuse, and I don't really want that. And I thought, what else can I say? So, tongue in my cheek, I said to him, look, I'm a banker, but I think I'm one of the good ones, and in fact, most of us are, so please don't stop your taxi and make me get out. And without any hesitation, he said to me, he said, oh, I noticed that you paused there for a minute. Well, I might pause. If I was walking on the pavement and someone said to me, what do? You probably read last week in the papers about the London taxi driver who was arrested for assaulting a passenger. At which point I thought maybe I do want him to stop the car and let me get out. So true story, but actually we both laughed, and I sat there on the rest of the drive thinking, this really is rubbish. Nobody should be working for a profession or for an industry, whatever you call it, where they have to feel ashamed, where they have to doubt what it is they're doing. Banking matters to society. Modern society can't operate without banking. And I felt some of us have to start putting our heads above the parapet, start talking about what banking is, and above all, what banking could be in the future. So if I were to look through another lens, looking ahead maybe 5 years, the approach to banking I hope we'll see is one that's built on professionalism, where the culture reinforces the fact that banks and bankers work for customers through the cycle in good times and bad, where decisions are taken for the long term. That is probably the most important factor, where we've learned how to measure where we're headed, what the future risks are, and not just where we've been. That will be transformative if that happens. Where bankers consult their conscience and not just the numbers when they make a decision. Where we have the courage to hold not just institutions, but individual bankers, each and every one, to account. That would indeed be transformational. Thank you very much.
Good evening, ladies and gentlemen. Thank you very much for this opportunity to be here, and if I may say, Susan, to honour you for all the great work that you've been doing in the area of raising professional standards and ethics. You've not shirked it, and to acknowledge the great work that you've done with the Chartered Institute of Bankers. But thank you, Magnus, that you restrained yourself on your litany of failure, and you'll be pleased to know, ladies and gentlemen, I'm not here to defend, to analyse failure, or in any way apportion blame or protect reputations. I am not an accountant. Actually, my profession is I'm a teacher. I was a teacher of religious education. My first job was in Wester Hailes in Edinburgh. I had an aspiration to be an accountant, but before I started university in 1978, I thought perhaps I should choose another path. How ironic one day that I became its chief executive. But I would like to explore the whole area of profession just now, ladies and gentlemen. I'm not here to defend a profession that could be perceived as an old boys club, where fealty to each other is more important than service to the client or doing the right thing. I'm not here to do that. That may be a perception. It's not one that I would share. And in fact, I think that's becoming less and less the case. My challenge is that, ladies and gentlemen, we live in an age where young people today have less sense of profession than I've ever known before. I don't mind, as a teacher, I do like audience participation. How many of you here would say you're a member of a profession? Please raise your hand. Ha-ha! A significant portion of the audience tonight is a member of a profession. Your Grace, I do believe you're a member of a profession as well, yes? But what we have today, if I use ICAS as an example, we have over 3,500 students. They are among the top students from the top universities in the United Kingdom, and I have the privilege of teaching in some of these classes. You'll be pleased to know I don't teach them accounting standards, but I do teach them ethics. And for the vast majority, this is all about getting a qualification than joining a profession. This is about a qualification as an access point to a good job, good earnings, and potentially success, and in their view, well-being on those terms. With the major firms who've historically trained, and they've gone through many morphs over the years, we're effectively seeing the commoditization of the training of young professionals. Qualify them, get them serving the clients and racking up fees. Ladies and gentlemen, I do believe that we are in danger, and I use the accounting profession as one, of losing the sense of profession if we do not act on it. And we are acting on it in ICAS. I also believe that professions generally, and some of you will share this, are becoming rather insular in their outlook because of overregulation. I do believe that professions have been regulated to the point where they're losing sight of what it means to be a profession. And let me tell you something about regulation. A regulator cannot create a profession. And society today, in my argument, would be we need strong professions led by strong professionals. I think it's time for a new narrative, ladies and gentlemen. If I go to the word profession itself, the word profession, in my view, and I have done my research and I've used this many times over the years, the word profession finds its origin in the vows that the monks made in the Middle Ages. Now you can translate vow to oath, or promise, or vow. Ladies and gentlemen, those of you who all put your hands up earlier on, if you don't mind me asking, if you're a professional making a profession, a promise, what was your promise? The esteemed Murray brothers here, chartered accountants, Norman and Edward, if you don't mind me asking, the motto of the Institute of Chartered Accountants of Scotland? Seek the truth. Seek the truth. Latin, quaere verum, seek the truth. That's your promise. Do you know what promise you made when you joined your profession? Now, ladies and gentlemen, I do believe we need to rediscover the sense of promise. And in the case of the Institute of Chartered Accountants, it is to seek the truth at all costs. But I also believe, if I take a wider interpretation, and I think this is about society. Society needs strong professions. We've seen the limits of government in creating good societies. A good society is a combination of so many things: human, cultural, artistic, democracy, yes, religion, and so on. We can aggregate them all. But one thing, ladies and gentlemen, is when some of the most educated and learning citizens do not take their place in society. That's when our professions have lost their place. And I do believe, ladies and gentlemen, there's an opportunity now for professions to rediscover their place in society. And with that, a renewed respect. I believe governments, society, and regulators should yearn for strong professions within society. Young people today want to be part of something noble. I have 2 children who are studying accountancy, and people say, was this the influence of your father? Well, they say yes and no. He did not persuade us to do it. But if this profession that he articulates often at the dinner table or on the phone is half as noble as it sounds, why would we not want to be part of it? Ladies and gentlemen, we want men and women to be members of professions wherein their professional identity and their promise lasts their entire human life to the day they die. And perhaps One, if one is buried, as distinct from cremated. One may even put one's designation on one's gravestone. I think it will be an accolade for the young today training to be chartered accountants when their great-great-grandchildren take pride when they say, my great-great-grandfather was a chartered accountant. Not just because he sought the truth, but because the contribution he made for the good of the society in which we live. I don't believe that codes and standards are enough to create an ethical profession, neither a banking profession or an accounting profession. I believe they are signposts and the principles that underlie them are important. But ethics is not a case of compliance with a code. We've had this concern in ICAS for a number of years, and in April 2012, we introduced the ICAS oath. All the new members of ICAS will make a public ethical declaration. We had to do something symbolic that brought it to the heart, ladies and gentlemen. And it goes, I declare that I will conduct myself in a manner that maintains and enhances my own professional reputation, that of my fellow members and ICAS. As a CA, I commit myself to acting in the public interest, and I will conduct myself with integrity, objectivity, and in accordance with the highest ethical standards of ICAS. Ladies and gentlemen, I believe that ethics and professionalism is about a continuity and consistency of behaviour across all areas of one's life and through all stages of one's life. One's profession, professional identity, and ladies and gentlemen, let's be clear, the sense of privilege and responsibility that goes with being a professional in society, these should act as a check against excess and wrongdoing. And I believe that they should be rooted in moral courage. The ethical standards globally for accountants are objectivity, confidentiality, integrity, professional competence, and professional behaviour. I have now started an argument with the International Ethical Standards Board for Accounting that we need a sixth standard and principle, and it is moral courage. Because really, that's when ethics is tested. I'd also like to share a view that we need a new narrative on integrity. What's the meaning of integrity? Religious education teacher, I just did test the scriptures. The word is used 16 times in the Bible. Uprightness of soul, uprightness of character. But very often you're looking, what are the ingredients for a man and woman, young man and woman, senior man and woman, who will have the moral courage to do the right thing in the midst of that challenge to do the wrong thing. We talk about good character, but also we talk about integrity. Integrity, ladies and gentlemen, is more than good habits that have been formed. It's character that comes from the heart. It is character that is resolute and cannot be changed or polluted. It is the unwavering determination in the heart to do the right thing no matter what. When I'm afraid, I will do right. When I'm not afraid, I will do right. When my emotions lead me the wrong way, I must have integrity. I must do right. Ladies and gentlemen, integrity is not just what people see. It is what you are. But young people will not learn this integrity and moral courage on their own or by codes. They need the example of moral leadership. And I heard recently a quote from a speech that John Stuart Mill gave at one of his early graduation speeches at the University of St Andrews. He says, "There is nothing which spreads more contagiously from teacher to pupil than the elevation of sentiment. Often have students caught from the living influence of a professor a contempt for mean and selfish objects and a noble ambition to leave the world better than they found it." I believe in the training of the next generation of professionals, we need men and women who will pass on that moral courage that will raise the sentiment levels to the extent that this is a noble profession and doing the right thing is exactly what one would aspire to in success. And if I can say something about success, we hear a lot about success, but we hear very little about fulfillment. We hear a lot about the characteristics of successful people, but we hear not a lot about the character of a truly successful person. I believe that honour and respect, quality, and the service of public good, ladies and gentlemen, are characteristics of success. I did not mention wealth. I don't mean to demonise wealth. But ladies and gentlemen, replacing short-term gain, greed, and excessive materialism, which can have a direct effect on one's behaviour, must be a priority in the tone of the professions and the training of professionals. We must think of lasting impact, replacing passing gain with long-term good. This is not intended, ladies and gentlemen, to be a sermon, but I do believe that there is an opportunity now for a new narrative that even the long-toothed professionals can be inspired again to see this as a noble and good work that they do. And they have an opportunity not just to serve the truth as accountants, but to serve the good of society. Thank you.
Well, Anton, you may say that you weren't giving a sermon, but actually it sounded rather like one. I wanted to ask some rather harder questions. Quite interesting that Susan's talk was looking in a way at how you try and introduce better standards from the top, and Anton was talking very much about introducing higher standards from the grassroots up, and of course these two things come very well together. But one of the things I want to ask you both is this, that despite the collapse of the bank in 2008, a lot of the scandals that we've seen emerging have emerged since then. And the edge of competitiveness has not gone away. If anything, it's almost sharper. You've got a profession, and we'll come back to the definition of profession, but we've got a profession in which you succeed by some really red in tooth and claw competitiveness. You get on in this profession by going as close to the line as you possibly can. The banks, for all that the people, as you yourself said, the people at the top of the banks are sending out messages about improving standards, but at the coalface, that competitiveness has not been reduced at all. Doesn't that encourage precisely the kind of behaviour that we're trying to mitigate?
I guess the way I'd start by answering that is to say it is not success when two big banks are being fined billions of pounds for doing something. That's not success by anybody's measure. That's failure. And the kind of competitiveness you describe has existed, and it's existed in certain kinds of banking. I mean, we have this wonderful confluence of lots of different kinds of financial activities and transactions, and we call them all banking. The language lets us down there as well. So yes, there's competition, but when the competition is for yesterday's results, yesterday's numbers, this is how we're judged by our investors, it's how, we're also judged by the accountancy profession, is looking at our financial results as were in the last quarter. I think that is what lets us down, to be very honest. Because no business, or very few businesses, actually function on their quarterly basis, particularly in banking. If we had a longer view, and if the judgment was about the success over a period of time, whether it's a year, whether it's longer, we'd have a very different sense of what that competition is. But we have all focused, those who judge us, as well as those in the profession, in banking, on what happened in the last 3 months. I think that's the failure.
And Anton, if I could direct the spotlight at your profession as well, in a profession where the quality of the advice that accountants give to maybe a large multinational company is measured by how much it can avoid taxes, then inevitably those accountants who they will turn to will be the ones who produce the sharpest advice on that, and that in its turn takes you very much closer to that moral line that you were saying, that we need to know exactly where it is. So how do you balance those two things in your profession?
Yeah, I mean, I would agree if there are exotic tax schemes that really are in breach of the spirit of the legislation, then people need to answer for it and explain it. Simple as that. But part of the challenge in here, and it's not to excuse the profession, but I stood outside the Treasury in advance of the general election for a photo call when we launched our ICAS manifesto. And the symbolism of it was there are 63,000 pages of tax legislation, which are around finance bills. And we have created the most complex tax system in the Western Hemisphere. And we have created effectively the means for people to find and identify legally, may not necessarily always be in the spirit, but legally, methods of tax management for the benefit of their clients. I would put the challenge onto government to dramatically simplify this, avoid the politicisation of the budget process every year. Now, I'm not being naive here, but every year you look at a finance bill here, and it's a lot of it's tinkering with the tax and allowances. All we're doing is creating the conditions for individuals and corporates to find more interesting ways of negotiating the tax system. Simple.
Now, there was another little sort of interesting argument opening up with Anton said was against over-regulation in the sense, and I quite understand that approach, that you have too much regulation, people retreat behind it or maybe find their way around the rules, whereas if you lift it, you throw the responsibility back on the individual. I guess that was the sort of general point you're making. Is that right?
Well, I mean, you gave a litany of both banking and accounting crises. Will there be another one? Yes, there will. Not because we had poor regulation. It's because of human behaviour. You can set standards, rules, and codes, but we will find a way around them. Principles that are a lot difficult to work around, but you provide detailed standards, and the United States are particularly good at that one. They prefer it well codified. People will find a way around. I can guarantee now there will be another issue or scandal, but we need to get to the heart of human behaviour, and that's where the regulator is limited in their ability. They can inculcate fear, but fear's not enough to be good.
Yeah. But nevertheless, Susan, you have a scandal in the banking world, and the first thing that the public, well, I suppose I should say the media, demand is tighten regulation. You must tighten the regulations, and governments who listen to that immediately rush to do so. But that flies exactly in the face of what Anton's saying.
Yeah, I mean, but in fact, I said the same thing about regulation, that too much regulation, every time there's a problem, a new rule comes out, and that means that you cease to see those other problems in the making, because all you're doing is focused on those rules, and they're hugely complicated. I think there's a real failure in that. There is such a thing as good regulation, and good regulation is regulation that actually allows some room for judgment, allows some room for questioning, allows some room for, if we're really trying to achieve this, will this path get us there? But not the kind of regulation that thinks that it's anticipated every single issue, because it won't have. And I agree with what Anton said. I often have said publicly that really none of us has, and I say it about myself, none of us has ever really grown up. And if you give me a rule, my first thought up here will be, how do you get around it? Now, for the most part, I choose not to get around rules unless I think there's a reason for it. But I think all of us are a bit like that. So exactly what you said, I think that's absolutely right.
So
That's
really
human
what
behavior.
you're talking about is self-regulation to a far greater extent.
It is. It's self-regulation, and it's a sense of what is the impact. If the impact is a concept, an abstract concept, which becomes numbers on a P&L or numbers on a spreadsheet, I think that is a remote kind of impact. If the impact is on society, communities, and people, and if you stop with almost anything that you do and almost any world of endeavor, and there's that kind of impact that makes you think a little differently, and I think that that's fundamental.
Well, I mean, I know exactly what you're talking about, because my profession is at the moment attempting to advance a scheme of self-regulation after one of the worst scandals to hit my profession that I can remember, the phone hacking scandal. So we're all, in a sense, in the same boat up here. But self-regulation, how can you ask the public, and it's important, we've talked about rebuilding trust amongst the public, and the public turn around and say, hang on, you've just been found guilty of whatever the latest scandal was, and you're asking us to say, no, we'll regulate ourselves, trust us.
Yeah, I mean, I'm not an advocate of self-regulation. A measure, potentially, of self-regulation. I think we should be able to set some standards for behaviours that transcend whether one is working in a bank one year, an investment house the other, or a charity the following year. We need a set of behaviours that are encouraged, developed and disciplined if they are breached. We do need a level of regulation. There's absolutely no question about that one. I do believe the public would not trust us. It would go back to some perceptions of looking after our own, when in reality we want to, and you find it in ICAS, when we have about 100 complaints a year. The members of the Institute that are on the panels in the minority are the toughest. They want to get rid of all the bad apples from the profession because it taints the reputation. But remember, what is it we're trying to deal with here? Eventually, this is not about some of the ways the banks run themselves. There may be some practice about capital ratios, etc., that we may learn some lessons in managing risk. But we're primarily dealing here with behaviour of individuals. Behaviour of individuals, and banks can create their own codes. They can have internal audit, they can have a whistleblowing approach. The rest, at the end of the day, when they are interviewing people to bring them into the bank, they will think, will this person let this bank down? They may have success one year, but could he let this person down the next? And they're hoping the professions are producing young men and women who they can say, those credentials are enough for us to say, we can at least trust here.
I want to, there's one other question I'd like to ask before opening this up to the audience, and it's not so much about the individual, or it comes down to the individual, as to the corporate body itself, because one of the problems for banks in particular, but I guess for big accountancy firms as well, is international competition. And we've seen the great debate about bankers' bonuses has been that in the City of London, for instance, in Edinburgh, you have a bank that says, if we are to hold our own in this intensely competitive international world, we've got to pay our bankers the bonuses that they expect, otherwise they'll leave and go and work for other people across the Atlantic, or we've got to increase our profits, and therefore we've got to go into this kind of casino banking that everybody disapproves of, but everybody recognizes that that's where the profits come from. So how do you square that?
Well, several different ways to respond to that point. First of all, the profits come today. It's the short-term profits come, but the losses come tomorrow. And I think that's the point that we've missed. So that's something that we need to pull back. That's number one. Number two, you started off talking about sort of the international scope of all of this. I would just, as a sidebar, and it's not to answer your question, say that most large companies and banks have very international staff. People come from all over the world, and yet you go into an organization and you hope that everyone working in that organization will reflect certain basic standards and expectations of behavior. And that's a challenge because people from different cultures actually grow up with different acceptable forms of behavior. I think that's that's an important piece of this. In terms of actual bankers' bonuses, I chaired for a number of years. I was a non-executive director at Scottish and Southern, it's a company most people here will know. For 11 years, chaired the remuneration committee for 6 or 7 years, and I take a very different view from some people on remuneration. That was a company, and still is, where the senior executives are paid below the median, they don't make the argument, and the Remuneration Committee wouldn't let them make the argument. We have to compete, and actually we get very good people running it who have other things that reward them as well as plenty of money, because they still get plenty of money. I think that the source of this kind of ever-growing, we have to compete with the next company because the next chief executive is getting a bigger bonus or being paid more, comes from the notion of what people thought was a good notion, the notion of transparency. So in the late 1990s in this country, when your chief executive's salaries at most big companies were being published for the first time, being put into the annual reports, if you look historically, that's when this escalation began. It didn't exist before that. So a good, which people thought was a good, transparency had an unintended consequence. Possibly simple-minded view, but I think there's something in that.
Is that something that you understand?
Well, I mean, Remuneration Committee advisors, what do? They'll just give you all the data, comparative analysis, and we're seeing salary inflation dramatically go up, as Susan has said. But part of the other challenge here, and I don't want to go into a debate about restructuring the functioning of the capital markets, but short-termism produces bad behaviours. And short-termism, and I give another illustration of it, quarterly reporting. I would get rid of quarterly reporting tomorrow, because not only do we have short-termism in terms of the view of investors, we get short-termism within a financial year, from quarter to quarter, and some of the behaviours that can take place even within an organisation. I'm not suggesting we get rid of all reporting mid-year, but there could be at least one step to go for mid-year reporting rather than quarterly, as one step to see how that affected the operations of a business or a bank.
And just a tiny sidebar, and that is that the investment community, in terms of bonuses, are based on quarterly results as well. It's not just within banking.
Well, I don't want to go into that. I was thinking of a highly technical question, but I shall avoid it and open this up to the audience and invite questions. And can I just ask you, if you would just hold your hand up and wait till the microphone gets to you before asking your question, otherwise we can't hear it. So we've got one question here and one there.
Thank you. If I'm standing outside a tiger's cage and the tiger has a smile on his face and he's wearing a red ribbon and there's a notice on the cage saying regulated by the Zoological Society, do I go in on that basis, or am I better to realise that what I have here is a tiger? And I suggest that attempting to put a pretty charming face on what is a very competitive industry actually misinforms the public. It's better to say this is a tiger. It has valuable properties, but extreme dangers as well.
The tiger issue, Susan, I think is yours.
I guess as you describe that, everyone says it's very competitive, and hidden in those words is it's very nasty and it's very greedy and it's all that's based about human beings. You can actually have competition that leads to good, and I think we need to pause and just back up and say, what is that good? First of all. Secondly, in terms of a tiger in the cage, I don't think banking has to be a tiger that is fierce and is likely to bite human beings, because that's in its nature. I don't think that is in the nature of banking. That's what I was trying to say, is that I've seen banking operate where that is not in its nature. Now, maybe we've put too much together. This gets to the argument of whether we should have investment banking and retail banking together in one institution. But I think there is a lot of banking that is not a tiger at all in terms of all of us.
I was just asking whether the tiger-like qualities that perhaps led to some of that behaviour that we've witnessed in the last sort of decade, let us say, is going to continue at that sort of level? Or do you think that this proliferation of scandals in itself is a sort of modifier or regulator of behaviour?
I think to some extent, there's a limit to how much money you want to, give to the regulators because you've misbehaved. And I think that it's a wake-up call to some extent. But I mean, like Anton, I think things change, and there probably will be another financial crisis, but for different reasons than we had in the past. I think these things just kind of come round, so I don't know that will change things forever.
Do you want to?
Oh, it's a powerful image. I do like the tiger. If I had in relation to banking, I would prefer, rather than a tiger in a cage, a Labrador as a faithful companion. You know, who walks with me through life, who is a good, faithful companion.
You'll go into the cage.
Yeah.
Right, we've got another question. Yours, no, the gentleman right in the middle there was the next one.
Hello. We were all shocked by the Libor scandal, and there was enormous publicity about that, quite rightly. But then we find out sometime later that the wrongdoing and manipulation of the foreign exchange market was going on after we'd had all the publicity of the Libor scandal. This seems to be just build shock upon shock, as far as I'm concerned. Do we not have to take action like protecting whistleblowers more? Because it does seem as if a lot of people knew what was going on. And also, of course, stiffer punishment for people, individuals.
Susan?
It's interesting, if you step outside of banking, you go to the world of retail, and you look, for instance, at what's happened at Tesco, where there was an internal whistleblower. And what is apparent, at least from the outside looking in, is that whistleblowers blow the whistle, and they typically feel relatively well protected. I don't think that in itself is an issue if it's a good internal speaking up program, but it's how people hear it and how others listen to it and how scientific, if you will, how objective those who hear that complaint or that concern are in actually dealing with it. Whistleblowing is much more complicated than it may sound or seem, so. Should people be punished? People are beginning to be punished, and that was part of what I was saying, which is, so people are now being banned, for instance, from operating in the banking industry altogether. Now, that may not seem like a punishment to some, but for somebody, if it's their profession, that's an issue. Others are being fined personally, monetarily, and that's right if they've taken money that is inappropriate. But I just think that you have to keep in mind that there's a lot of nuance around these wrongdoings. They're wrongly done when you see them written up and, there it is, black and white, this is a bad thing. But actually, when it's going on and what's happening is not always observed within organizations. It's not always understood. And in fact, people sometimes think they're doing the right thing before they realize it's the wrong thing. This is much more complicated than, oh yes, we just decided to do the wrong thing.
What about whistleblowing in your profession?
Yeah, I mean, it's a very important thing, but in some sense, whistleblowing is way at the end of the journey. It's too late. When you get to whistleblowing, it's too late. What we're looking for are, when you look at the anatomy of some of these failures, and I think that the investigations have had a limited success in articulating the psychology of some of this. And I don't want to go into a theological discussion on sin, but sins often start with sinlets. And often a major Libor ethical breach started off with something very, very small. And then the risk-reward psychology kicked in. And then human behaviour took its course. Now the challenge, how would you check that in the future? You're surrounded by colleagues who go, I smell this, don't do this, don't go any further. Check. We can be surrounded with professional colleagues who are a brake on some of our human weaknesses and our temptations. I think that would be a great help. I mean, it's great we have a whistleblowing policy. Isn't it so much better to be surrounded with colleagues who have the moral courage to say, don't do it, let's not do this.
Now we have one question here, but I think were you not right there yes, you in the middle were first, and then we'll come to you. And then
Ian Hardy, member of the public. I really think Dr. Rice is not in the real world in terms of progress in relation to ethics. I just happen to have a quote here from Mark Carney. He believes now that the scale of misconduct in some of the financial institutions is so bad it is a risk to the stability of the financial system. Basically, I think you're getting nowhere fast.
All right, well, that was a statement, as it were, and I'll ask the speakers to react to it, but we'll take another question here as well.
Yes, speaking as an academic, traditionally, professions were self-regulating bodies. That's the very nature of them, and they disciplined their members. If government has to start regulating them, then the professions have failed. Now, the next thing I'd like to say is with respect to banking. Now, I can understand that retail banking, or shall we say, the handling of public and private finances could be a profession. But investment banking is investing, and that is simply gambling and cannot possibly be a profession.
Well, that's a very good point. And so we'll tie those two together, Susan. I think, A, you are not living in the real world, and B, when you talk about banking being a profession, it can't be a profession because investment isn't a profession.
Well, the latter point first, and I've said some of those things myself. Now, that isn't a view that maybe most bankers hold, but actually there is something in investment banking that is gambling, and it takes a different mindset, a different kind of background. There's a lot of difference there than from the kind of banking I was describing when I was speaking. So, I mean, I agree with you. They are very different. In terms of not being in the real world, everyone's entitled to their own judgment. I think I am in the real world. I have extensive experience in banking in a lot of different ways in different countries, and central banking as well as on the ground banking. I think that it is, it's my own view of the world, it is sort of reprehensible if all we have, and this was my thoughts back in 2009, are people who are willing to blame and scream and yell, and if we cannot muster some kind of forces to say, let's get around the situation, let's improve it, let's move it forward. And so that's really what I'm talking about, is making some progress. I'm not denying the bad at all. I would also say that the governor of the Bank of England makes a statement like that. There's a context in which that's stated as well. I won't go into that, but there's an audience expecting to hear things from that person. But,
Chairman, I didn't quite finish my point about...
Go on, we can hear you.
Sorry, yes, I didn't quite finish my point about the professions. The point is that if you are self-regulating, then your ethics operate. If someone comes from outside to regulate you, you can't have ethics. Ethics is an internal, self-driven thing. And anyone who wants a bonus is not a professional. He does his work because he loves it, and he wants to do it according to the principles and ethical principles of a profession.
I think that actually, to be fair, was a point that Anton himself was making about where ethics begin and how you inculcate them. Although the bonus point is an interesting one. There was one at the back there, and then one there, and then one here.
Thank you. Ethics very easily go out the window when the rewards are substantial, and I think that recruits the wrong sort of person and the wrong morals. I don't think you can have a profession in those examples. So surely the regulation perhaps of salaries, of having percentage limits or multiple limits on salaries would be a far more effective way, rather than believing money is the sole reward.
Yes, good point, but we'll take another one at the back there.
As a managing director of a bank, I'm wondering if you could work us through what happens in the morning after you have your cup of coffee. You read in the newspaper that your bank has just been fined £45 billion, dollars, whatever, for what you would construe as an unethical thing, like foreign exchanges or whatever. What happens starting then and over the next few days? Who do you talk to? What do you say? What happens to the people? How far down the organization does it go? Just, what happens behind the door? From the outside, we could conclude maybe nothing because nobody's gone to jail, but I suspect that's not really the case.
Susan, would you like to pick up that point and perhaps the point also about salaries?
yeah, well, first of all, you're absolutely right. That isn't that isn't the case, and people don't then sort of say, oh, well, here it is, it's out there, and let's march on. There's a huge amount of soul searching. There's a huge amount of turning up every rock in sight to see if there's anything else that goes on, to work out who and what and how did these decisions get made that would have led to the kind of thing happening that is ultimately seen as the bad thing. And as I said before, it is very often very complicated. In very large organizations, you get committees, you get teams, you get different people in different divisions, and everybody has a piece of it. And one of the difficult things is how do you tie all of that together and say, where was that responsibility and where did it stop? The idea that people along the way should act as stops because they have it in them to say, wait a second, would that lead to these consequences or not? I've espoused that for a long time. I think that's very important, and I think you begin to get some of that happening when the institution has been hurt in that way. But I would also say that there's something in human nature, and I saw this when I first went in my career from academia into banking. This was in the US, that when there was a pretty big problem, there was a tendency to fire somebody. In America, it's called GQ'd, got quit. They're let to go, let off, but they announce that they've left the organization. Actually, they've been fired. And if the person's at a high enough level, then the rest of the people in the organization kind of wash their hands of it and say, well, it's gone because that person is gone. It, to me, is a very funny way, in an institutional sense, of dealing with the problem. So I think you've got different kinds of things happening. One is kind of get rid of it, and then we're clean again. The other is to really dig down and understand it. And some institutions will do more of the one, some will do more of the other.
You want to pick up on that?
It's a really complex, big, chunky things we're discussing here. They affect, it's about human nature, behaviours. What is banking, really? What is the public good? What is the good that's provided to society through banking? And if we articulate that well enough, would it inspire young men and women to want to be bankers? Because they're doing good as much as earning good salaries. And I think this has been part of the narrative now within the accounting profession that we're trying to articulate it. We're more than providers of service, but we're actually serving the greater good. The ensuring the effective functioning of the capital markets, that's noble. Now, if you have a salary that matches the skill level that one has had to acquire to be able to do that, that's one thing. But I do think we have to elevate the sense of what one does that is virtuous, noble and good, and I don't think it's very, very difficult to do that. The tone is set in the boardroom. The tone is set from the chief executive, what we want this institution to be like and what we want its service to be to the greater good, and then you articulate that to shareholders and say, will you back us?
And the shareholders say, well, provided you produce a reasonable profit, yes.
But they're not mutually exclusive.
The question down here.
Mr. Colella, you were saying, Colella, that you were not qualified as an accountant, but you're the chief executive of ICAS. Yeah. And obviously you're doing a good job because you've been in it for 10 years or so. What shocked me the most, I think it was during the select committee or the inquiry into the bankers, was when they were asked if they had any qualifications. And not one of them had anything even remotely like a banking qualification, not even a sort of O-level in banking. These were all meant to be the heads of companies, including our disgraced head from RBS in Edinburgh. Now, that shocked me that they had not passed one little exam in banking, and yet they were in charge of all of this. Now, that said, I'm well aware of leadership qualifications, strategic management, and people like Stuart Rose, who are heads of companies, seem to know nothing about the companies, but it's called transferable skills nowadays, and they move from company to company using presumably the same techniques, and if they get good results, then they're regarded as a great director or leader. Now, don't you think that these bankers, and the reason we're in this mess is that they maybe should have had some qualification in banking and they might have been concerned about more than the colour of the the fleet of cars, etc., etc. The other thing, I think you meant, just one very quick point to you as well, when you were talking about putting the moral courage aspect as another point on the accountant's list. Surely, does integrity, is that not covered by moral courage? Anyway, 2 points for consideration.
Let's deal with the first one first. I mean, here you are, you're not an accountant, for heaven's sake.
I've not been found out for 8.5 years. Now, in fairness, the individual that appointed me or presided over is actually in the room today, so one can discuss it with that individual. But in fact, your point is well made, but I would like to rush to Susan's defence and Simon Thompson's defence here, who's the Chief Executive of the Chartered Institute Bankers of Scotland here tonight. These guys have done a phenomenal job the last number of years to qualify the banking sector. And the banks are coming to that place. I have a son-in-law who's currently studying to be a chartered banker. And I think that is becoming an aspiration. Now, banks are complex places. It's more than one particular set of expertise that would allow a bank to function. There are many. But your point is very, very well made. But let me just go back a bit. It's not enough to qualify. It's not enough to qualify. That's the easy part. This is where professions come in. There's something about inculcating a sense of values by moral leadership and by example that will allow one to have the moral courage to deal with the difficulties one faces. That's the challenge for the professions.
What about the point about the bankers in 2008?
Well, actually, if I could I just do a footnote to what Anton said, because I think that's a very important point, that it is folly to think that somebody who qualified as a banker 30 years ago is actually qualified to operate the best way that they could do now. And so the whole notion of continuing development and, in essence, continuing qualification is absolutely fundamental in a very complicated world. And I was going to mention Simon and the Chartered Banker Institute as well, because they have a very active program of seeing people through that. I mean, I participate every year in order to retain my, if you will, qualification as a banker. You don't have to have been born a banker to be a banker. You can learn, as I did. But you need to keep it up as you go. I think that's really important. The institutes play a really important part.
But I also think there's something here about the governance of institutions, that we ensure there is a level of expertise at the governance level that can scrutinise and interrogate. I do remember Lord Miners at the height of the beginning of the financial crisis publicly said every corporate board should have a Scottish chartered accountant. I took it as a compliment for the profession, that professional scepticism that interrogates tenaciously the detail until they're satisfied with the answer is important. For too long, in some sections of corporate governance, it's been a cosy thing that one does when one retires, and one is able to take some of one's experience and bring it to the boardroom. Those days are gone. Nowadays, if one wants to be an independent, non-executive director that will set the tone and hold the feet to the fire, more professionals who have some expertise should be heading into the boardroom and not watching and letting others do it.
I'm going to leave the integrity and moral courage theological point to the last, but there's a question there, just near the back.
There was quite a lot of discussion early on regulation and self-regulation, and perhaps the crisis was in part caused, would we say, by the government's quite light touch, as it was described, regulation of the sector, particularly the last Labour government. However, I suppose then the point on self-regulation inevitably is a consequence of where self-regulation has failed. And I suppose undoubtedly the sector bears that as well. But I'd specifically like to ask Susan Rice. Susan, surely one of the other causes of all this was quite appalling management and quite appalling management standards within the sector. And it's interesting, I think that's clearly something that the bank and the group that you're doing is clearly looking at that, and that's got to be a good thing.
There has been appalling management, and there's been indifferent management, and there's been good management along the way. I mean, I find it very hard to say that there has been a blanket form of something. What there was for the financial crisis, which was hugely unfortunate, is that banks found themselves funding each other, so that when one banking institution finally failed, it was like dominoes, and the whole lot fell afterwards. And that's when I was talking about homogeneity. They became too dependent on each other. That was a real failing. And should management in some institutions have spoken up and said that's a problem? Possibly. Should others have spoken up? The regulators, possibly. And the regulators did a great mea culpa in 2008, the spring of, saying we, the FSA as it was, forgot about liquidity management in banks. Basically, that's what they said. Lots of people are, guilty and didn't get it right, but it is hugely complicated, and it's very hard to get it right, and to be at the top of one of these institutions is an enormous responsibility for that reason. So a huge amount of knowledge is required, but it is this intensive scrutiny and asking of questions. It's just what Anton said, which is why I started off talking about being a scientist. It's asking questions all the time that actually you can help the people around you begin to understand what is good and what is not good about what they want to do. And so there's something about a style of management as opposed to managers just being bad or irresponsible that I think perhaps was missing.
Well, we've run out of time, but I am going to ask Anton in one sentence to say what the relationship is between integrity and moral courage. Are they not the same thing?
They are similar. But the reason I'm bringing moral courage to the fore, as one might say, a principle of ethical behaviour, it is more, in my view, more active. Integrity is a statement of one's character, of uprightness, but moral courage is a deliberate action of taking a stance and a position in response to something which would give one otherwise great fear and trepidation. Because the word courage itself is something of the heart. The French, the cœur, something of the heart. And I think there's something about the profession. We can skill them technically, but we need to put into their hearts the fearlessness that they will take a stand regardless of the cost.
Excellent. Well, look, ladies and gentlemen, I think we've covered a huge amount of ground in a relatively short time, and I would like you to thank both our speakers tonight.
Thank you, Magnus. The purpose of evenings such as this is to stimulate discussion, to stimulate thought, and I hope each and every one of us will leave here with some aspect upon which we'll reflect slightly differently. And if we do that, I think it'll be because all of our contributors this evening, both Susan and Anton and Magnus, have, I think, spoken frankly and openly about issues which I don't think are addressed in that way as often as they should. And it was right that Magnus identified the fact that whilst we're looking at ethics in the context of banking and accountancy, his own profession, because of phone hacking, in holding up a mirror to other failings, has had to acknowledge the failings themselves. And that whole tussle between what is the inner spark of the individual, what is the standard of the individual within a profession, how does that relate to the form of regulation? I hope this has been about us all enjoying the prospect of a new narrative. I mean, it's patently clear from the conversation this evening that new narratives are required. New narratives required about short-termism, lack of investment, the judgments that are made around that. A new narrative in regard to what are the responsibilities of a profession. I was a lawyer in origin, and one of the league tables I think that it would be very interesting to see today is in whatever the profession, how many times the professional parts company with the customer or the client because the professional is being asked to do something which is actually contrary to the values that both Susan and Anton have been describing. That's part of being a professional. I think also the idea of an oath would have to be very carefully taken forward on the basis that you cannot debase a coinage by making an oath as the means by which the world will change. I support the oath proposition, and let me just give you for a moment one of the reflections I have of I think the most amazing man I have met and for whom I chaired a lecture, Joe Rotblat, who was part of the Los Alamos project, created as a physicist the atomic bomb. The day that the bomb exploded for the first time, he committed his life to the proposition that scientists should sign a Hippocratic Oath equivalent, taking responsibility for what they'd undertaken. I think it's a very interesting proposition that the determination, the integrity of the oath is such that actually behaviours would change. However, that's not my attempt to distill what I think has been a very interesting conversation by others, but I am very grateful to all three of you for having presented in the way that you have, and I would ask you again to join me in thanking all three for what they've